This Week in Startups is brought to you by Capterra. Join the millions of people who use Capterra every month. To start your search today, visit capterra.com/twist. And Walker Corporate Law, a boutique law firm specializing in the representation of entrepreneurs. Visit them at walkercorporatelaw.com.
Figured we'd blow your minds at before 9 o'clock. Okay, Brian, no pressure. Thinking big. Yeah. All right. So, Brian, how'd you do at poker last night? Let's get to the meat and potatoes really early.
Did pretty well.
Did pretty well. Okay.
All right.
Good. Hopefully, you enjoy the poker.
I do enjoy the poker. Not very good. I enjoy it.
I'd say you're halfway there on your journey. I was watching last night. You were not making stupid mistakes.
Oh, that's like as high a compliment as you can get from him, right?
I will tell you, in poker, like in life, not doing stupid things is half the battle. Like, if you think about the mistakes people make in their life, if you were to eliminate the mistakes, they might have a successful life. And like in poker, it's the same thing. Like, you could stare at the stealing all night of the mistake you made that ruined the evening's efforts.
Well, thank you, Jason. That's high compliment from you.
Yeah, but let's talk about something that you're not halfway there on, but that you're leading in, which is, I think in the venture capital space, Founders Fund came out of nowhere and became, in under a decade, what people consider, top 5, I think would be a fair assessment. Where are you guys in terms of?
I think if you do by scoreboard and by returns, we're probably top 3.
Top 3.
Top 2, but yeah, top 5 is fine. I'll take that.
Okay, so I'll give you 4. Top 4. Okay. We'll split the difference. But if you look at the portfolio over here, let's go from left to right at the top. This one, STEM-Centrics. Nobody heard of. You invested in a cancer company.
Yeah.
And it got sold for how much over what period of time?
Well, we invested in early 2012 in STEM-Centrics. It's a therapeutic biotech company focusing on curing cancer. It got bought for $10.2 billion by AbbVie last year.
And so this is quite a return. I don't know what those return numbers mean over there.
I think this was supposed to be an angel investing conference, and we don't do much angel investing, but I think the top one is like return on first investment, and the bottom one is blended return over all investments in the company. And
you're placing huge bets.
Yes.
What was the bet in STEM-Centrics, and what percentage of the fund was it?
Thank you for putting it like that. That is the actual correct way to put it. Percent of fund. So we made our first investment in STEM-Centrics, the one in 2012, was a 6% of fund investments. That's the fund 4 made the investment in STEM-Centrics, a $625 million fund, put about $35 million in on that first check, and then piled on to the point of eventually putting about $300 million into the company.
And so while the return of the 24x in the early fund on a percentage basis is just extraordinary. On a pure dollar basis, the 5.7 return, the blended return, or the latest return, cash on cash, was much greater.
Yeah, I mean, cash on cash is.
So explain that. Yeah, let's break in that example.
We put about $300 million into STEM-Centrics, and you can multiply it by that bottom number, and that's and so that you can figure out the cash on cash there, which is also the right metric to discuss when discussing venture capital. It's not about deal-based IRR. I mean, that's kind of irrelevant. Like, it's cash-on-cash number.
So let's talk a little bit about SpaceX. That's another one that's worked out pretty well for you. Tell us about your history in SpaceX.
Yeah, so actually the SpaceX investment was the reason why I joined Founders Fund. So I was doing a bunch of angel investing and had my own angel fund. And then in late 2007, I met Sean Parker, who I became friends with, and I was about to raise another angel fund, just some personal money in angel fund, and he said, "Oh, why don't you come check out what we're doing at Founders Fund?" And I, of course, had never heard of Founders Fund in late 2007, but I went down there, and that's when they were considering investing in this company called SpaceX. And I said, oh, this is exactly what I want to do. And so we made our first SpaceX investment in 2008. Our first investment in SpaceX was a 11% of fund investment, which, not many venture capital firms are set up to do these types of bets. But this is how you make money in venture capital. Like, you're not going to make money by doing 2% bets, all day. And so the first investment in SpaceX was an 11% of fund investment. We've since put about $200 million into SpaceX total and still investing in SpaceX.
And of course, Palantir, Peter Thiel, who founded Founders Fund with Sean Parker. It was the two of them.
Luke and Kenny.
And Luke and Kenny were involved as well. They were the first four, and then they brought you in, so you were.
That's right.
But Palantir was something that Peter had started as well, and that's done it pretty well as well. Talk about Palantir, and tell us a little bit about what Palantir does.
Oh, yeah. I mean, Palantir is it's like we like to say, we don't have to hear pitches from a lot of these big data companies because we have the big data company in Palantir. Palantir finds...
That's terrifying. Continue.
Palantir has, has relationships and clients ranging from governments to commercial entities looking for, patterns, and they've actually done some pretty amazing things, especially things that people in this room can really appreciate that we can't really talk about. But Palantir, we actually
protecting us against another 9/11 would be one of them.
Maybe. And we've made one of our Palantir investments was a 33% of fund investment. So just to give some context, we put about $75 million of a $240 million fund into Palantir at a $1 billion valuation.
And of course, Deepmind was the 30 or 40 PhDs in England who figured out how to make a clock understand it was a clock.
Indeed, amongst other things. But Deepmind.
Well, I remember meeting the founder at one of these parties, and it was 2 a.m, and he's like, yeah, and then the clock realized it was a clock. And I was like, this is 5 years ago. I was like, can you explain that to me? And he said, well, the clock, we built a clock, and then it figured out it was on a network, and then it tried to leave the network. And I was like, wow, this kid's really drunk or full of shit. And then they got bought by, explain what Deepmind did that got them bought by Google, and when you met them, and what was going on over there, because there's no Deepmind product in the world.
Right. That's right. And so Deepmind, of all the companies on this, is the one on there that doesn't actually have a product. And it was an interesting investment because the team was above and beyond anything we'd ever seen. We actually did the seed investment in Deepmind. So we are completely stage agnostic and completely sector agnostic. We'll write checks from, $100K to $300 million. And Deepmind was just a PhD project. These were just the smartest people in artificial intelligence we had ever met. And when it came, but they had no ideas for what they were going to do to productize this.
How did you find them? They reached out to you, or they were in Oxford?
Through connections. You do work as venture capital. You go and meet people in audiences.
And somebody said smart people in England
smart people,
are doing
and sometimes
AI.
you make connections, and they're like, oh, you're into that? Oh, okay, remember, this is in 2010. This is before AI was, as Esther pointed out, this ubiquitous thing all around, especially in the investment community. And there weren't many people who were willing to invest in a company that had absolutely no vision of what their product would be, other than they were going to actually get to artificial general intelligence first. And so we saw a lot of value in that. But then, yes, they eventually, Larry Page could offer them a much bigger budget than any venture capitalist.
And this was disappointing to you, I'm taking it, because this company sold with 30 or 40 employees, from what I understand, and had unlimited upside. And y'all tried to stop them from taking Larry Page's money.
Well, we don't ever try and necessarily stop a founder from doing anything.
Convince them to stay independent was what
we tried giving them options to stay independent, and then at the end of the day.
How do you do that? Take me through that discussion.
Well, it needs money.
Right.
I mean, the founder needs money, and the founder needs to be able to say, okay, if I take this money, I'm still not going to build a product that generates any money for another 20 years. Do you guys really want to do that? Right? And
wait, 20 years, you're being facetious. They had an idea of a product in year 21?
Something like that. They were going to build artificial general intelligence.
General artificial intelligence.
Yes, not narrow, not specific, not.
They're not going to win Go.
Product. They're not going to win. The goal of this company is not to win Go like they've been doing now.
Yeah.
Yeah.
But now they're trying to win Go, or they're doing the Go project. Were they doing the Go?
It's all on the way. It's all on the way. Larry Page has given them a pretty big budget to do this.
How many people do you think, if you were going to guess, are working on AI at Google? How many?
Oh, I don't know. A lot. It's by far the biggest.
Hey, everybody, let me tell you about an amazing website that I love and use regularly. It's called Capterra. Capterra, Capterra. I always feel like it's a good idea to spell it because you might be listening, you're driving, you're running. You need to know Capterra.com. It is a website where you can find software that your business needs. You ever have this? God, I need a new piece of software. I need some mail server software. I want to get a better price on my mail server. I need a website, or I need CRM, or I need sales software. You always need some software, and you know what? There's so many different applications out there today in so many different categories that wouldn't it be nice if there was a website that could help you sort through it, like Yelp, but for software, for business software. Well, that's Capterra. Thousands of ratings and reviews from actual software users, and it's such an easy-to-use website. They have 400 categories of software to choose from, over 400. And whether you need help with website building or customer service, project management, maybe you want to track applications or figure out your email marketing, millions of people use Capterra every month, and using Capterra is absolutely free for users. There's no obligation. You don't need to register. It's a free resource that will help you make the right software decisions. And we all know, if you make a wrong decision about your software, what's going to happen? You spend all this time, all this money, and you have everybody trained up, and then you made the wrong decision. You got to rip it out, start over. Everybody's got to get trained again, new user handles, all this kind of nonsense. You want to get it right on the first try. Go to capterra.com/twist, capterra.com/twist, CAPTERRA.com/twist. Find the software that will help you do what you do better. That's all they want to do at Capterra. They want to make you more successful. So go ahead and visit capterra.com/twist. Thanks again to our friends over at Capterra for making a great website and a great directory that's super helpful, and for supporting independent media like This Week in Startups. We truly appreciate it.
What do you think the chances are? We had this rock, paper, scissors yesterday. Amazon, Google, Facebook, other, of who would win artificial and who would be the big beneficiary as an investment in artificial. What do you think?
I'm not taking that bet. I'm not suckering into that. Those three companies are all ridiculous in so many ways.
But what do you think? Let me say this. Those three versus other. In other words, a Deepmind that decides.
Those three.
So the idea that somebody's going to come from behind
to win, to do what? To write the first general artificial intelligence to usher in the singularity? Is that what you're asking?
No, but I like that question, so go ahead and answer it. It's kind of a better question than I was going to formulate. I was going to think who's going to build the first, let's call it $100 billion AI company.
Well, the question is, what does that mean?
Exactly.
And so, is it because there's a product, or is it because it's created this thing that can make humans different, right?
All right, so let's talk about the chart, the acceleration of AI progress.
Oh, man.
Yeah, let's go right, since we're going down the rabbit hole. Elon thinks, hey, this thing is going to take off faster, we're going to lose control, we got to put some reins on it. Larry Page is like, no, let's just let it wild. And Elon's being hyperbolic. Where do you sit?
Well, I think artificial general intelligence is extremely hard. I think this will take, I'm taking the over on
20? If I set the line at 20.
Yeah, I'll set the line at 20 is a fine line. But I'll take the over on these people who think, we're going to have artificial general intelligence and singularity in 5 years. Which I've heard a lot of people talk about. We don't know.
You don't know.
I mean, that's really the answer, is I don't think we know exactly what is going on. I actually am extremely happy that there is a large group of extremely smart people at least joining together to talk about this stuff and try and figure it out.
Right. The impact on jobs is the one that I think probably will have the most impact on our society in the short to midterm. I think the person running the Treasury of the United States said that AI will not impact jobs for another 50 to 75 years was the quote. So I think we're all taking the under there. What impact will this have on, I won't give you the easy one, which is self-driving retail and that kind of stuff. We know that's going. But let's go into the white-collar jobs. Law, accounting, sales, marketing, I don't know, just stuff in the middle.
Here's my thesis on this.
Yeah.
Automation, I'm not going to call it artificial intelligence, but hardcore automation will have an impact on every aspect of jobs. However, since I'm going to take the over on most, people in Silicon Valley's estimate on when we're going to have artificial general intelligence, my belief is that jobs that deal with human caring or human-to-human communication or that are going to accelerate rapidly. I think being a nurse practitioner or a nurse or whatever is going to accelerate rapidly in terms of job demand. Humans are going to like to talk and be communicated with by other humans for a very, very, very long time in that regard. Alexa,
you don't think that's going to be the solution?
Not when it comes to certain things that you didn't want somebody to make a connection there.
All right, so these are massive returns for a small number of LPs, and society has a massive polarization of wealth issue. And in fact, we're all participating in what is this amazing, returns machine, which is technology companies and being there in the early stages of them and having access to their cap tables and participating in a major significant way in them. How do you think about the polarization of wealth in our country to start? Because it does seem to be getting better for other countries because they were in abject poverty and they're getting out of it. But in our country, the polarization is getting very severe. It caused the election results. Your partner, the founder of your firm, is pro-Trump, which is very weird for us all to understand, but we'll put that aside. When looking at the polarization of wealth, how do you think about that in society and solving that? Because you have folks running around saying, we just got to go universal basic income. Are you a fan of that? Or do you think raising minimum wages or education? Or do you think the situation is fucked?
Well, I think the situation is really difficult. I'm a consummate optimist. I've actually won a lot of money betting things against people who are complete pessimists on the world. I do think this is going to be a challenge for a very long time. I think it is currently a huge challenge. I think, one of the things we are trying to do is, use technology to make everybody's lives better. Like when I sit on the board of things like Alt School is not meant to be a private school for the wealthy. It's meant to make it so that you can have a scalable, good education for everybody using technology as a catalyst to drive that. And so a lot of things we do are trying to get to the point where, hey, everybody has access to, top quality things. It's going to be a long road there. That's not going to change anytime. Whether the solution is UBI or whether the solution is something with regards to the current minimum wage, I have not focused enough on those things to know what the answer is. What I am ruthlessly focused on is investing in these companies that I do think can make life better for everybody. That's my part in this.
Well, if you go down the top line, it is pretty clear that curing cancers, making humans multiplanetary, giving people the ability to stay in places cheaper and
make money.
And make money. Save us from terrorism while giving up our privacy. It's a little bit of a controversial one. And then the ability to easily do commerce for lower prices without being at the, having to deal with banks that charge massive fees. I give you 4.5 out of 5 on that top row.
Oh, hopefully we can improve on that for you, Jason.
Well, although I just think Palantir's got that little bit of a double edge.
I want to first thank my friend Scott Walker for supporting startups, not just supporting This Week in Startups, but startups themselves. Walker Corporate Law, as you know, is a boutique law firm that specializes in the representation of entrepreneurs and startups. That's what they do. And they encourage fixed fees. What's that? They give you a fixed price. You know what you're going to pay to do your startup financing, to do your corporate formation, to do your trademarks, to do whatever you need to do, employee stock option plan, licensing, mergers, acquisitions, terms of service, privacy policies, all those things that are check boxes for your startup. They do with lawyers that have decades of experience, 10, 20 years. No junior associates getting on the job training, and they specialize in startups. That's why they're so good at it. That's why they can give you fixed fees, and they're really in it for the right reason. Scott Walker comes to all of our events. He's a real true mensch. He spends a lot of time talking to founders, and you can call him directly right now, 415-979-9998. 415, that's San Francisco, 979-9998. Or you can email him, scott@walkercorporatelaw.com, scott@walkercorporatelaw.com, or visit walkercorporatelaw.com. Scott's a great guy. Tell him your Uncle Jason sent you, and he'll take care of you. Okay. Thanks, Scott. Appreciate it.
What is it like to work with Peter Thiel? Tell me about the day you found out he's going to be publicly supporting Trump, because I don't think that you voted for Trump.
No, I'm not a Trump supporter.
I don't think anybody in the firm is except for him. So what is that like when you go to a meeting with him and it's a super polarizing world where people are freaking out about Trump and he is publicly going out and saying, this is my guy, we got to get him in office, and rounding up Silicon Valley to bring him there? I know it's a hard question, but let's just tackle it head on.
I'm more than happy to answer this question. You know, unlike what seems like a lot of people in Silicon Valley, I am a firm believer in people do not have to be the same. People do not have to have the same exact opinions. People do not have to have the same exact views. I love working with people that have different views than me. In fact, I think one of the reasons why Founders Fund is so successful is because of that. Our debates are large and many and plentiful, and people have very different opinions, and we thrive on that. So no, I'm not a Donald Trump supporter. The fact that Peter is, okay, great, let's talk about it. It shapes the fact that we can have conversations that no other firm in Silicon Valley can have. And not only that, but the people that shy away from talking to somebody based on who they supported politically, man, I mean, that seems like one of the largest problems in this country now, and the thing that's making the separation even more than it already has been. Like, if I can get anything, if one thing can change in Silicon Valley over the next couple of years, it's the ability for people there to actually just talk with people with different political views than them.
Yeah. Agreed. How do you look at early stage? We had Cyan up yesterday. Obviously, Cyan and I came up as angel investors together. You started as an angel investor. We were talking last night. We had a discussion about how the field has changed. You guys have really changed the game in venture capital. What's your approach to early stage and working with angels?
Oh, we love it. I mean, so venture capital comes down to four things, and I'll get into why I don't think number 4 is that important, but it comes down to, do you see the right deals? Can you pick the right deals? Can you get into the right deals? And then part 4 is, do you help the company, after you're in the deal? And I actually think that's the least important part, and I can get into why later. But those first 3 parts are ridiculously important. So all that we do with the angel community, and Cyan is actually leading this, for us, is so important, because there's no way as individuals you can see everything. And people in this audience, people all around, are going to see things that we would never otherwise see, that are not in our backyard, that are not in our fields of expertise, but that could still be ridiculously good companies. And so we embrace that. Cyan is like having an event with these people, with people like, this is a huge part of the ecosystem, is angel investing. It's very important.
When do you want to see a company? So, when we see each other and run into each other at the movies or something, and you say like, so what are you working on? And like, what companies do you like? And I give you 2 of them. They're immediately in your office, and you're meeting with them in the next 2 weeks. But what is, aside from, hey, you trust the angel, what is a criteria for a founders fund investment, if you had to think about it?
Oh, yeah. So it's a great question, because since we are so stage agnostic and sector agnostic, it's not like I can say, oh, we're looking for Series Bs in health space or whatever. That's not a thing. And this is where we are all individuals, and everybody at Founders Fund can kind of run their own strategy. And we encourage everybody at Founders Fund to run their own strategy, and those could be very different. Like Cyan has a very different strategy than me. That's great. Like I don't know which one of those is going to be right. I know Cyan is ridiculously good, so like that'll make us some money, and I think that I can do this stuff too. But for me personally, I'm looking for anything that I think is extremely important for the world that has an existing moat, right? Not if they do this and this and this, then it'll be really good, but something that has an existing moat of some type. And that can be early or late.
Unpack the moat concept a bit. I mean, we know what the term means, but in today's world, give us some examples of moats. Maybe starting with that slide, where are the moats?
Sure, yeah. I mean, so STEMcentrics, we didn't angel invest in STEMcentrics. Let's be clear. Our first check was like around 35 million. That was at a $300 million valuation. This was a company that had already shown efficacy. Not in humans yet. That was the next stage, and that's what got them the big price tag. But they had shown efficacy in mice, and we really dug into their mouse model and thought that was going to work. In other words, we had never seen a company that would actually cure solid tumors in small cell lung cancer before. We'd never seen that. In other words, that was proven to us. So that's a clear example of an existing moat. SpaceX. Okay, when we invested in SpaceX in 2008, they had 3 rocket launches, all failures. But hey, at least they had built a company that could have a rocket launch, right? Good luck trying to clone that. So one of the things I like to say, and not in, for press or whatever, is like anything that a Y Combinator company can clone in 3 days, where I'm probably not going to be interested in. Good luck trying to clone SpaceX, right?
Yeah.
Like Airbnb is another classic example here. We didn't seed invest in Airbnb. It was way too easy. We saw it. We screwed up by not investing, but it was way too easy to clone then. Doesn't matter. We have no FOMO. Right? I'm not going to say, oh man, we missed out on the Airbnb early stage, so that means we shouldn't do anymore. No. So we came in and put in $150 million in Airbnb at the $2.5 billion valuation round. And that's because we had seen at that point, there was literally no competition for Airbnb. We're big investors in Lyft. There's tons of competition for Lyft. There's tons of competition for Uber. There's literally no competition for Airbnb in that regard.
They have a network effect going.
It was so strong. Same with Facebook, when we put all the money in, right? I mean, it was so strong. So, those are just some examples of what I mean by existing moat. Oscar, we actually invested in
What is that?
So Oscar is a health insurance company on the Affordable Care Act, the company's based out of New York. We invested in Oscar early, and that's because they had gotten approval to be on the Affordable Care Act exchange. This is not something that any random startup can do. Lots of startups build tech for health companies or tech for health insurance companies. You can't get the approval. I was telling people at dinner last night, like, to be on the board of this company, I had my, both of my hands fingerprinted hardcore by a government official. Like, insurance is so highly regulated to do that. So we invested in that early because they had already gotten that approval, and that's hard to do.
All right. With that, let's thank Brian.
All right. Thanks, guys.
Well done.